But we've got to shift gears here as summer is right around the corner this morning. So what should investors be keeping an eye on is the big question. Our executive editor, Brian Sozzi, has a list of 5 key trends to watch out for between your vacations and beach days, and he's here with us now. Also, we've got eToro's Ben Laidler and Tom Essaye from the Sevens Report. They're still with us. They've stuck around. Thanks so much. All right, so help us walk through some of what you had to write this morning, Sozzi, as well, just in the fact that there is a lot to be keeping an eye on over the course of this summer, too.
Yeah, let me just tee this one up for the team. I actually cut this list down from 25 down to 5. There's a lot of things happening in the markets this summer. I'll start with Target. I'm watching Target shares. Stock's down about 14% in the past 2 weeks as I think concern builds on Wall Street on 2 fronts. First, a sales impact from the consumer backlash we are seeing from them pulling LGBTQ plus merchandise from their stores a couple weeks ago. How does sales look like in the second quarter? And then this falls into my second thing to watch that I mentioned in the newsletter. What is the impact to companies like Target that sell discretionary stuff as students start to repay their student loans in early September? That is real money that could come out of the registers of these retailers. By some estimates, $4 or $5 a month could be the payments that a lot of college students have to start paying back. That is less money for many retailers. Next up, I'm also watching AI stocks, and I'm pumped to see Ben Axler, noted short seller, on our programming later on today, talk about his case against C3 AI, because I think you will see a differentiation between companies like C3 that maybe are on the edge of the AI, generative AI movement, maybe not even doing anything related to generative AI, but then big companies, more established companies like Hewlett-Packard trying to reinvent computers for the future of AI and various new powerful chips. And then lastly, of course, I'm watching Apple stock with WWDC well underway. What is the market? How do estimates change as maybe some optimism starts to build regarding this new AR headset? And of course, the Fed, that Fed meeting is coming up very, very soon. Expectations have been the Fed does not raise rates at its next meeting, and I think that's what the market is melting up on. I could have went 25.
No, you couldn't.
I could.
No, you absolutely couldn't. No, that's too much to keep track of, dude.
No.
All right, so let's get to our guests then. Back to our guests. Ben, what are you watching over the summer? Is there something you're zeroing in on that you think maybe people have overlooked a little bit or that should be paying more attention to?
So I think the economic slowdown is going to arrive. And I think, one of the takeaways from Friday, right, is that it tells you how concerned investors are about that, right? We get better jobs market numbers, and instead of selling off, markets rally. That tells me that markets are and investors are, very, very focused on the economy. I think the slowdown's, is coming. It's inevitable. I think with rates at 5%, with tightening lending standards, with the spending cuts are coming from the debt ceiling bill. So I think at some point over the summer we're going to see worse economic data. I'm not sure that's necessarily bad for the market, but I think that's coming. We're going to get lower volume, we're going to get some seasonality. People are worried about that. I think unduly. Volumes never traditionally, fall as much as people think, and markets don't necessarily perform that badly, right? It's just more that it's not that very bullish fourth quarter as we reposition for the year ahead, and it's not that very bullish first quarter with companies telling us all the fantastic things they're going to do this year. So I guess sort of seasonality and economic slowdown, those are the 2 things I'm watching.
Is Tom, from your perspective, the Fed, the looming cloud over the summer forecast here?
No, I don't think so. I think the Fed is sort of the third in my list of things I'm worried about this summer. And it's a flip from last year, right, where the Fed was really driving the market. This year, the data is driving the Fed. And so I think growth, obviously, how much do we slow during this summer? But then also that core services inflation, right? Because at the end of the day, you're looking at core CPI still over 5%. Now, that'll come down gradually because of base effects as we roll the calendar. But at the end of the day, the Fed is not going to be able to sort of announce this dovish pivot that everybody's going to start hoping for in a couple months until you get inflation down to some sort of an acceptable level. And I think that for me is one of the wild cards out there. It seems like people have kind of forgot about inflation, right? It's just sort of this disinflation is assumed. That we have come down in inflation, but we got to keep going. 5% is not good enough. We got to keep going down. So I think inflation could pop back up this summer as a market influence.
Tom, Brian here. In the newsletter this morning, like I just mentioned, we talk about Apple and how important that is to the market. But we're also seeing really melt-ups across the tech space. Valuations have gone up significantly. How concerned are you that we are looking at a potential 2000 type of situation here? We saw this run up in 1999, And this might be, to some, starting to feel similar.
Good morning, Brian. I'm not worried about it yet, mainly because I think, that tech was coming out of such a hole from last year. The AI euphoria makes me a bit nervous, but this is somebody who has been through, various waves of tech euphoria in my career that haven't always come to fruition. It seems like the really big things kind of come out of nowhere sometimes. So the pure momentum and sort of fervor behind AI just makes me a bit nervous. I get that it's transformational and all that, but I don't think we're at valuation levels that would make me super, super nervous on tech broadly. The one caveat here is on yields, right? Part of the reason that tech has outperformed this year is because yields have come off recent highs. If you have yields go back, which goes back to my inflation point, if you have yields start rallying again, tech's going to get hit, kind of regardless of how awesome, ChatGPT or AI is.
Guys, thanks so much. Really fun stuff with you both this morning. Ben Laidler, eToro Global Market Strategist, and Tom Essaye, Sevens Report Research Founder and President, also Yahoo Finance Executive Editor Brian Sozzi. Thanks, guys.